Toole here with Remax Mainline, coming to you with a quick video message to help you stay ahead of and informed about the local real estate market in the greater Philadelphia area. Today's January 3rd, 2014. Everyone wants to know what the outlook's going to be in 2014 for the real estate market. We saw a major shift in 2013 from what was previously a very buyer-friendly market with lots of options and being very challenging for sellers into a true seller's market in 2013. So what's going to happen in the next year? What I want to detail here are four key things to expect in the 2014 real estate market that are going to help you prepare to make the best possible decision if you're going to be making some sort of real estate move in the next 12 months. So number one, inventory is likely to stay at or below the current levels that we saw at the end of 2013. At the end of 2013, we saw inventory levels just below 6 months, meaning that if no new homes came onto the market, it would take just under 6 months for everything to sell. It's anticipated that we're going to see similar inventory levels moving forward. Certainly they jump up in the spring, but there's a lot more buyers out there and those homes get sold. So you can anticipate something between 4 and 6 months in terms of inventory levels moving forward. That's a big change from where we were 12, 18 months ago, where we saw between 9 months up to a year's worth of homes on the market. And when inventory is low, that benefits sellers because there's lesser options, and it's something where buyers need to be ready to make a move on anything they see interesting because there's just not that many options out there, especially in choice neighborhoods. Number two, rates are likely to go up simply because the Fed has started to temper their bond buying efforts. When the yield on the 10-year Treasury bond drops, rates go up. When the yield goes up, rates go down. So with less bonds being bought, the yield's going to drop. In 2013, we saw a jump in rates from as low as 3.5%. As of today, you're looking at 4.55% on a 30-year fixed loan with conventional financing. That's a point increase. We're likely to see that jump up a little further here as we get into the new year and move into the spring and summer selling seasons. Really monitor that 10-year T-bond. That's going to tell you what's happening on a daily basis with rates. What does that mean? If you see the home you like and you're trying to outthink the market, buy the home because you want it. Don't buy it because of the mortgage rate. Bullet point 3, FHA loan limits are getting decreased in our local market. Previously, they were at $417,000. They just were decreased to $379,500. So what that means is that low down payment option for something in the $400,000 range, only having to get into a home for 3.5%, isn't going to be out there. That tells me that having a hefty cash down payment is really going to help you find the home that you want and be able to make a move on it. There's a lot of additional costs associated with FHA loans as well. It really seems like the government's trying to phase out this product with all the changes that they're making. It's just not as attractive as it was 2, 3, 4 years ago. So my recommendation would be stay away from them if you can, and make sure you got enough cash in the bank to come in with a significant down payment. And item 4 to keep in mind for the 2014 market, prices are going to continue to rise. This year we saw a 3 1/3 to 5.5% increase in the local real estate prices, and we're probably going to see something similar again in 2014, which is a very stable growth. What that means is that if you see something you like as a buyer, you may want to make a move on it because the next home's probably going to cost more. For sellers, you want to anticipate that that's where the market's going, but also realize that sometimes your best chance to get your best price is when there's nothing else available on the market. So be mindful of the competition as well as the overall direction of the market. Hope you find these 4 quick information nuggets very helpful. If you have any questions or you'd like to talk more about the market, call me in my office, 610-692-6976, or check out my website, tomtoole.com. Thanks for your time. Appreciate you checking out my video. Talk to you soon.